Hey everybody, we wanted to go through Nike right now. What's going on at the company? Right now, the lowest valuation in over 10 years. Stock is not doing well. Is it time to buy? Let's take a look. This is the stock chart here of Nike, and as you can see, 75 bucks, almost as low as the 2020 COVID low, essentially. Not a great investment over the last 5 years. Let's look at the future here. Let's look at the valuation before we go there. As you can see here, Nike in the last many years held this 28, 30 PE level for a long time as it was growing. Current PE, 19. Very cheap, very affordable. Let's look at what's going on there. But before we look at Nike, I want to look at a couple other companies. This one is Deckers. Deckers owns Hoka. Hoka has those very colorful shoes you're starting to see at the gym a lot. And look at their revenue growth, right? Really nice. 4.2 billion last year, 4.8 billion this year, plus $500 million in new revenue for Deckers. Not all that's Hoka, but you get the point. They are growing. Next up here, On. This is Swiss Roger Federer brand. 2 billion in revenue last year, 2.5 billion this year, another plus $500 million for OnCloud. Now let's look at Nike's revenue growth. And as you can see, $51 billion this year. Expectations next year, 49 billion minus $2 billion. OnCloud is eating their lunch. Deckers, Hoka are eating their lunch. Foot Locker, fewer shoes on the shelf. You can see essentially they've got less market share. So is this cheap enough to buy down here? Let's go through the valuations real quick. EV to EBITDA 18 times. We got EV to net income here 24 times. And we've got free cash flow yield, which is the one we love at 4.3%. Is this low enough? Well, they don't have any debt. Debt minus cash is zero, so we don't have to worry about debt holders sitting in front of us, or at least any net debt. But we would want to see this number a lot larger. We would want to see plus maybe, let's call it 6 to 7% free cash flow yield. Because then what could happen is, one, it could revalue higher to a more likely 5 to 4% free cash flow yield, and we'd win on that move. Or they can use that free cash flow to buy stock or pay a dividend and throw it to us, the shareholders. So essentially, where we really like Nike, probably around $70, maybe a little bit lower than that, $65. We really love that valuation in Nike. If it does get down there, we'll probably be interested in it. But as of right now, just a little bit too expensive for us. But it's getting close. It's getting really close, and you should keep an eye on it. That's it from us on Nike. If you have any questions or you want to see anything else from us, hit us up.